Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on AMC Entertainment Holdings. And yes, folks, Reddit has taken control and is sticking it to Wall Street, the fat cats right now. So what I'm going to do is go over a summary of the company, its product offerings, including the expensive popcorn, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation or for both the short term and the long term. And maybe, folks, I'll even create my new category. We shall see. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. So let's get right into it. So everybody should know that the company owns and operates or has interest in theaters across the world in the United States. As of March 17, 2020, it operated approximately 1,000 theaters and 11,000 screens in the United States and internationally alone. So let's look at some crazy news that's happened out there. So basically, AMC's share price today quadrupled as retail traders raid hedge fund short targets, and TD Ameritrade, get this, TD Ameritrade is now restricting trade of AMC and GameStop on its platform as of today. But let's just go ahead and look at the crazy fundamentals of the company right now. And I'm going to do a very brief analysis on the fundamentals because I want to talk about what's going on with the company today. So currently, the company is unprofitable and is now forecast to be profitable over the next 3 years. The analyst projections of revenue by the end of 2023 is $4.76 billion with a negative $447 million in earnings. The company would have to drastically change this around to even stay afloat in the next few years. I mean, as you can see here, it's currently trading at $16.32 a share. And what happened today? It went from basically a penny stock almost, all $2 all the way up to $16. That's crazy. So AMC underperformed the U.S. entertainment industry, which returned about 64% over the past year. And here, let me bring it back here. I can sum it up by saying the company is fundamentally flawed at the core, and without the capital raise, they would have reached bankruptcy. So they raised a bunch of capital recently, and the capital raise will only push the company out another year. It will definitely repeat itself again without a miracle. Like, oh, wait, we need a miracle going on with AMC right now. AMC is one of the most highly leveraged companies in the entertainment industry and has a debt to total capital ratio of 165.18%. Additionally, the percentage of debt used in its capital structure grew this year. The company may have difficulty making interest payments. Its interest coverage ratio of 2.56 times is among the highest in the industry, but shows that earnings from day-to-day activities are too small to service the debt. How about we just look at the profitability analysis real quick? They lose money on an operating basis. AMC appears to be an inefficient company. While its profitability is among the best on a gross margin basis, its bottom line, folks, the net margin is among the weakest in the entertainment industry. And how about growth? Because we need to know about the growth of the company. The trailing 12 months earnings at AMC declined at a greater rate than the revenues because of the coronavirus pandemic. Additionally, the average company in the entertainment industry also saw falling earnings, but they were kind of at a slower pace. So what do the analysts say right now on this company? The Wall Street fat cats, right? So the consensus is a hold, but that was before today's news. So that was when it was at $2 a share. So what I'm telling you right now, the analyst projections with a $2 share price was a hold. 66% said a hold, 22% say it's underperforming, and 11% say it's a sell. The average AMC stock price target is $2.15 with a high estimate of $3.50 and a low estimate of $1. So it's trading right now at $16.40. Now $16. It kind of came down just a little bit. I think you see where this is going. Now let's go over a few of the analyst reports. Now the Ford Equity Research, the Street Ratings, RT Research team have it as a sell and avoid. Now, the ownership breakdown of the company is 55% owned by the public, 24% private companies, 18% institutions, and individual insiders own 1.4%. The insiders have basically sold a lot of their shares back in December, and shareholders have been substantially diluted in the past year, with total shares outstanding growing by 104%. So my buy, hold, or sell recommendation on AMC Entertainment Holdings, here are my thoughts. Ultimately, there is a fundamental catalyst here. AMC announced on Monday morning that it had raised $917 million in new capital since the middle of December. The release quoted the CEO Adam's Adam Aaron saying any talk of an imminent bankruptcy for AMC is completely off the table. That's because they raised $917 million. It was on the table. But it's not that the capital raise that is driving today's morning rally. Rather, it appears to be driven by the sudden famous or infamous WallStreetBets forum on Reddit. The same group seems to have led a massively engineered squeeze in GameStop and then turned their sights on AMC, another heavily shorted stock. Indeed, quote, hashtag SaveAMC is trending on Twitter, and as that hashtag suggests, part of the appeal and going after AMC stock is the desire to put it to the predatory hedge funds that are looking to profit off the demise of the movie theater chain, which is maybe might happen unless a miracle happens. Coordinated buying of the stock is supposed to engineer a short squeeze, which will lead to huge losses for funds betting against GameStop, AMC, and other names. Indeed, Redditors are taking credit for the forcing hedge fund Melvin Capital into its own capital raise. But a short squeeze alone isn't causing the current spike in AMC stock. It's more complicated than that. The real causes suggest that the rallies in AMC stock and other WallStreetBets names are going to be they're going to reverse at some point, likely with a equally violent fashion crash. To some extent, there's likely to be a short squeeze going on with AMC stock right now. When look at the data, roughly 36% of shares outstanding are sold short as of mid-January before the massive rally of late. As AMC stock rises, these shorts may choose to cover the limit losses or, in the case, salvage profits. AMC hit an all-time low this month. Others will face rising margin requirements that lead to forced liquidations. On top of that, there's more going on here, however. AMC is still a low cost to borrow shares. Squeezes usually see a far higher cost to borrow, since squeeze generally occurs when supply is limited. And the 37% short interest is far lower than the 100% plus GameStop stock saw before its epic run up, and I think it's still running up as of this minute. This is a very simple, coordinated buying, likely amplified by a so-called gamma squeeze. Market makers in AMC options have to buy stock to hedge the calls they sell. And as the stock rises, they have to buy even more stock to hedge those calls. Just taking a brief look at AMC options shows that the gamma squeeze almost certainly is driving today's move. Options volume for the February expiration is massive, over 31,000 call contracts at the $5 strike alone. The contract just at the single strike and the single expiration covers nearly 3% of AMC's total shares outstanding, and with put volume far lower, it's almost certain that a gamma squeeze is driving factor. So you ask, what happens to AMC stock right now? The problem with this gamma squeeze is that the same dynamics that led to the underlying stock skyrocketing in the short term will almost guarantee it crashing right back down just as quickly before you can even hit that sell button, or that like button in this case. And yes, call buying will dry up and disappear at some point. There's no other way around it. Without the underlying fundamental support, these prices for both AMC and the options will not be able to hold forever. This epic rally in AMC stock is a pre-planned, engineered spike by those people over at Reddit and the forums. Now, yes, some of you will argue that the capital raise merited some upside. Yes, I totally agree. Some, minuscule, very small. It still needs a miracle to get the revenues that it needs to come over the next 3 years to actually be profitable. But now what is now a rally of over 350% from levels of just a week ago or a day ago, this engineered spike was awaiting for just that news. I believe that they were waiting for the news that they're going to do a capital raise to survive, and then that's when they're going to come in and squeeze. If you think AMC will sustain this run up or the start of the run up, I have 4 words for you: Willy Wonka's imagination land. This Reddit revolution is real, but ultimately they will not be able to bring down the entire market. But in isolated cases, just like they're trying to do, they're trying to stick it to Wall Street right now. So they went after GameStop. They're going after AMC. There's news that they're going after other companies. Now, this isn't just the fault of the short sellers, and they predate the coronavirus pandemic. AMC closed 2019 with $4.7 billion in debt. Growth that year was minimal prior to the pandemic. Let's examine their capital raise for a moment. The CEO only said that imminent bankruptcy had been averted. Elsewhere, AMC wrote that the company estimates that its financial runway has been extended deep into 2021. And folks, simply getting to the end of 2021 is not enough. Where's your revenue going to come from to actually get you out of the hole? With debt now over $6 billion, the long-term financial outlook remains death-defying for the company. In fact, AMC is paying interest on some of its new debt in kind, meaning that it's making cash interest payments. It isn't making a cash interest payments, I'm sorry. So can you guess what my recommendation is right now for those that have watched my videos? You know where I'm going with this. AMC is a challenged company, and I feel that in the end, AMC stock is likely to give back a chunk of those gains, or probably all of them, and go back down to the $2 or even the $1 mark when no one wants to touch the stock ever again. If the hashtag #SaveAMC on Twitter was really legitimate, though, and here's a big point. Why are they not buying movie tickets on a massive scale to actually save the company? It is because ultimately they do not care. They just want to stick it to the Wall Street fat cats, but not save Main Street. So people need to actually go out and tell these folks, save the company. Who gives a hell about the fat cat Wall Street people? Save the company. So am I buy, hold, or sell right now? I have created a new category called avoid this one at all costs right now and move on. Short-term investors might be able to profit off the huge swings going back and forth, but for long-term growth investors, my recommendation is stay on the sidelines, sit in the chair, grab your oversized, ridiculously expensive popcorn, chocolate, large cola, and enjoy the show. I myself, after this video, might watch Willy Wonka's Chocolate Factory. And so there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear my daily stock recommendations and reviews. Until the next stock update video later today, folks. Ciao.